Hi, thank you for watching this iGrow podcast. I'm Lisa Elliott, Commodity Marketing Specialist, and today I'm going to be speaking about the grain market outlook and strategies for 2013. To get started here today, we'll first talk about corn, then we'll move into soybeans, and then follow out with wheat. First, we'll talk about 2012-2013, where we're setting for this marketing year, and we can compare this to where we were in 2011-2012. We currently just had a report released last week, the World Agricultural Supply and Demand Estimates, and so we'll also talk about some of those changes from January to February. So to get started, we know that our production was hurt in this marketing year due to the drought, and we can see that our production was this year pegged at around 10.8 billion bushels, while last year we were setting more around the 12.4 billion bushel mark. And so with this lower production level, we've seen some rationing, and the rationing, what we expect will be on the export side. And we can see that from comparing last year to this year, we have about 600 million bushels less in exports we're expected to export in this marketing year compared to the previous year. Now, our domestic usage, we are expecting to ration on ethanol production about 500 million bushels. And so we're sitting at our ending stocks at approximately, it's expected 632 million bushels. And we can see that this puts us in a very tight position as we compare to previous years. And the USDA, from that report, that WASDE report that was released on February, we can see that our average price that we can expect is $7.20. So from the changes in the report, this left us with our ending stocks increased by 30 million bushels, moving from the January to February report. So to put this in perspective, we can look at this graph here where we are able to see the ending stocks where we are expected to be for this marketing year. And we can see that we're quite a ways below our average for the U.S. And our average ending stocks level has been around 1.47 billion bushels. And we can see from this year and the previous years that we've been extremely tight. Thus, we've seen prices being supported in these years with our tight ending stock situation. And we can see that this year, with our pegged ending stocks at 632 million bushels, that we haven't been this tight since 1995 when we were at 426 million bushels. Now to move on to the world perspective, where we're sitting for annual ending stocks, going back from 1997 to where we're at currently, our average has been around 140 million metric tons. And this is shown by the green horizontal line. So we can see in 2012-2013 that we're on the world scale that we're going to be, it's expected that we'll be below this average. And from looking at changes from the report, moving from January to February, we've seen that for Brazil's production, that it's been raised from 71 million metric tons to 72.5, and Argentina's production has been reduced from 28 million metric tons to 27. And we'll talk a little bit more about the weather and the conditions in these countries coming up. So if we're looking at the March 2013 futures corn price, what we're doing here is we're using the USDA price projection from the WASDE report, and we can see that their average projection in the near term is $7.20. And if we have an upper bound, we add $1.50, we get to $8.70 being the upper bound. And then the lower bound, if we take $1.50 off of 720, our lower bound would be 570. So in the near term, we're looking right now, these are as of yesterday, these future prices, and we're sitting below this average expected price in the near term. And so there may be some opportunities when we get into being in the average price range to upper bound, some opportunities to sell some old crop. Now if we're looking to the December 2013 futures corn price, what we see here is we're going to use what was just released, the USDA baseline projections, and we can see that this expectation for the 2013-2014 marketing year, the average price we're sitting at is $5.40. And if we put an upper bound, we add $1.50, this gives us $6.90. So we can see as of yesterday, we were close to this average price. So one may consider locking in prices between this average price and the upper bound. Now to put this in perspective of where we are, now this chart here is the South Dakota Corn Seasonal Price Index, and what we can see is with this red line, this gives us a longer perspective from 2002 to 2011, with the blue line showing us 2007 to 2011. And we can see, due to our tighter stocks in the past years, that this average, the peak, has changed from moving from June, moving on out to July for the average seasonal, the highest price received, this indexed here. And so if we look at if we're in February and then we can compare to the expected high in July, according to the seasonal price index, we would see maybe around a 10% increase from where we're at currently on price levels if we waited till July in the peak of the seasonal index. Okay, now we're going to look at U.S. accumulated corn exports. And what we have here is our current export pace for corn. And our yellow bars show us where we're at in this marketing year. And we can see our blue bar, this shows us where we were in the previous year. And if we put a simple linear trend on where we are today, we can see where this would put us. And this would put us slightly below this red line, which is what the USDA is expecting us to export in this marketing year. So we see that our export pace will have to increase for us to meet this USDA projection for corn exports. And another side note is looking at on the export side, we also look at export sales. And currently we're running about 57% of the expected USDA estimate versus the 5-year average of about 66%. Now moving on to soybeans. The drought affected our production in soybeans as well, and we can see last year we were sitting more at 3.09 billion bushels, while this year we're at 3.0, close to 3.02 billion bushels. And so we've had a decrease in our production. And on our demand side, we see that the domestic side is where we expect our rationing to be, and this would be around 100 million bushels less than where we were last year. However, on the export side, we expect our exports to stay around similar levels as compared to last year. And for our ending stocks, the carryover to the next year, we're sitting at 125 million bushels. And this is at a record tight situation of where we're at on ending stocks. And from the movements from the January to February report, they actually increased the crush by 10 million bushels, which caused our ending stocks to be decreased by 10 million bushels, leaving us at the expected 125 million bushels. So to put where we are expected to be in this marketing year and compare that to previous years, we can see that this year, and if we look back to the previous 5 years, we can see that we've been below the average from 1996 to current, where our average ending stock level for the U.S. would be around 235 million bushels. And since we can see that over in the past few years, we can see that prices have been supported with this red line in the past years where we've been below this average, being supported above the $10 price range and above. Now looking at the world perspective on annual end stocks, we can see that the average from 1997 to current is around 46 million metric tons. And we can see this year we would be above this average. Now this would be due to the record crops that is expected out of Brazil and Argentina. And from the January to February report, we had Brazil's production increase from 82.5 million metric tons to 83.5, while Argentina's was lowered due to their drier conditions from 54 million metric tons to 53. Now looking at the nearby March 2013 futures soybean prices, if we use the USDA average price projection in the near term, we would be sitting at $14.30. And if we put an upper bound, if we add $3, this upper bound would put us at $17.30. So as of yesterday, we can see that we were around this average. So for old crop, there may be opportunities to sell in between the average and the upper bound. If we're thinking about the new crop prices, here what we're using for our average prices based upon the last report, the USDA baseline projections for prices. And for 2013-2014, this would be $11.35. And so if we're looking just at the September 2013 futures price, we can see that we're between the average and the upper bound here. Now looking at the South Dakota soybean seasonal price index, we can see that from comparing 2002 to 2011, a longer time span to currently, we've shifted when the average highest price received is from between June and July now to August. And so if we were looking at comparing from February to August, based on the seasonal price index, you could have potentially an increase of 10% onto current prices if we were looking to hold till August. Now the U.S. accumulated soybean exports, we can see that the yellow bars show us where we're at currently and our pace, and the blue bars show us where we were in 2011. And the red line shows us where the USDA is expecting us to meet by the end of the marketing year. So if we simply put on a linear trend here, we could see that we would be largely above the USDA estimate. And however, it's expected that we will start to decline our accumulated exports tremendously over the upcoming months. And this is expected with the record crops coming out of Brazil and Argentina, that soybean importers will be looking to start buying more from those countries and do less buying from the United States. But that's something that we'll continue to want to monitor in the upcoming weeks to see if our soybean export pace decreases over the upcoming weeks. Just to also talk about the sales. Now this is accumulated exports. What we also have is we monitor the actual sales. And it's important to point out that currently we're at 93.5% of the USDA estimate, when compared to the 5-year average, we are sitting closer to 78. So we're clearly above the sales pace here from the 5-year average. And also we've had very strong sales in meal and oil as well. Now we can look at the weather, and this is the 30-day precipitation analysis for looking at some of the states in Brazil and what has occurred. And we can see that there's been some wet regions here in the Mato Grosso region, which may have dampened some of the first production in the country of Brazil. But if we look out into the forecast, we can see that in the same region, it's expected that they'll see some more drier conditions than normal. And so this should help with their harvest pace in these states here. And as we move down here, it's important to look that these are some of the southern exporting ports that they're expecting precipitation, which could damper some of their export pace if there's rains in these ports that may cause delays in being able to export in some of these facilities. Now moving to looking at Argentina, and this is some of the reason why the production numbers out of Argentina from our USDA that they have lowered some of their production is because of the dryness that we've seen in the production areas. And this will be something, this is just the 30-day precipitation analysis. So the market will be looking at the forecast, and to move to the forecast precipitation, we can see that there still will be in the production areas drier than normal conditions here. So this will be something that the market will continue to watch to see what those estimates of the crops coming out of Argentina will be in the future. Now moving on to wheat, we can see that our production was greater this year as compared to last year. And with that, on the demand side, our domestic usage for wheat has been higher than what it was in 2011-2012. And it's expected that we'll export about the same amount as we did in 2011-2012. And one item to point out on the domestic usage side would be the feed and residual number that's a part of the domestic usage. And it was actually raised from the previous report by 25 million bushels. So we now have the expected feed and residual number at 375 million bushels. And this is a record number for the feed and residual number. And we haven't seen this high of feed demand since going back to 1964. So we're seeing strong feed demand. And if we look at where this puts us in ending stocks, it would put us at around the 691 million bushel level. And the average expected USDA price is $7.90. And to move on to the U.S. Ending stocks and price relationship over time, we can see that over time, the green line shows us the average ending stocks for the U.S. at 694 million bushels. And we're very close to this average. And we can see that when we've been close around the average, that prices have been this year and the previous year, prices have been supported at these levels, looking at the red line showing the price relationship. Now, looking on the world side, annual end stocks, our average from 1997 has been 161 million metric tons, And we can see that it's projected that for this marketing year, we will be above those levels. However, it's important to point out that a good portion of these ending stocks are held in non-exporting wheat countries such as China, the Middle East, and North Africa. Looking now to March 2013 futures hard red winter wheat prices, and this is just using the World Agricultural Supply and Demand Estimate from the USDA, their price range in the near term, $7.90, and if we add $1.50, creating the upper bound, that puts us at $9.40. So we're seeing that we're close around this average. So there may be opportunities for old crop to sell between this average and the upper bound. If we're looking for new crop prices, a guide on those, we would use the USDA baseline, which we have that currently forecasted at $7.20 for the 2013-2014 marketing year, with the upper bound at $8.70. So we're in between the average and the upper bound. Now if we look at the South Dakota Winter Wheat Seasonal Price Index, we can see in February where we're at, and we can see the high is typically seen for winter wheat in South Dakota in March. And so from February to March, there could be about just using the seasonal price index, an increase of 4% on where we are currently. And to look at the export pace for wheat, we can see the yellow bars show us for where we are currently for our export pace, and the blue bars show us where we were last year, and the red line shows the USDA estimate. So we see here that we will need to pick up the pace in the upcoming months to meet this level that the USDA has us pegged at. Something important going into watching the prices for wheat in the future will be continuing to monitor the weather and to see, since going into winter dormancy for wheat, we've been one of the worst ratings for wheat. So it'll be something to watch to see what the ratings are in March and the weather, how it's forecasted in the upcoming months, to see what impact that has on the ratings of wheat. And just to point out that on a weekly basis, we do the cash prices and bases, and we update that, like I said, on a weekly basis for 6 regions in South Dakota, and one can find these at igrow.org, and they can go to agronomy and then go to market profit tips and then markets and prices to find these. And I'm going to share a few of these slides with you today for the East Central region. And first, to look at from last week, our East Central South Dakota corn bases. And we can see that at the current levels, which are right here, what we've seen, versus previously from 2012 to the 5-year average, our bases are stronger than historical measures have shown. And this is due to the U.S. Tight supplies here. So we could expect to have strong basis levels and even possibly strengthening on throughout the upcoming months due to the tight supplies. The same thing can be shown looking at the soybean basis. And what we can see here is we're above, we have stronger bases than what we have historically. And if we compare to the previous, to 2012, and even the 5-year average, we see from the February period on a slight increase. So we may see a strengthening in the bases for soybeans as well. Looking at the East Central South Dakota winter wheat basis, we see here that we are following a similar trend as the 5-year average. And to discuss a few possible marketing strategies here, we have strategies for old crop, specifically corn and soybeans, and then we'll discuss a few strategies for new crops. So for old crop, and using the information that we talked about, that basis may be strengthening, and if we have different options, if one feels that the futures would be neutral going forward, staying around the similar range we're in currently, one might consider selling some covered calls. And for soybeans, one may sell May at $14.70 call and receive 30 cents. And on the corn side, sell May $7.25 call and receive 17 cents. However, if one feels that basis would be strengthening and the futures increasing, one may also consider to continue in store and monitor the markets in the upcoming months. And when we're looking, and this assumes that in order to get supplies, that the basis, the local prices, would then have to adjust, and not assuming that the futures would take this role on and acquiring bushels in this tight situation for both corn and soybeans. And if we're looking at strategies for the new crop, so for the U.S. production numbers, so we're looking into the potential production in this upcoming year. If we use what the USDA baseline projection they just released recently, they would have our corn production for 2013-2014 at about 14.4 billion bushels. And our usage would be at around 13 billion bushels, which would then, with the expected ending stocks for this marketing year and where we're at expected their projections for 2013-2014, this would put our ending stocks in the level of around 2.1 billion bushels. And so with these numbers, the USDA projects an average price around $5.40. And we can think back to some of the previous slides that showed this relationship of ending stocks and the price relationship. And so on that side, we can think about the corn situation that is being projected, but we can also think about the projections for soybeans. And the USDA currently is expecting U.S. production to be around 3.3 billion bushels and usage to be around 3.3, and expecting ending stocks for 2013-2014 being in the neighborhood of 185 million bushels. So this would even still put us somewhat of tight ending stocks next year. And they would have the average price for 2013-2014 at $11.35. And so depending on what your projections are for the U.S. production, if you're in the camp of expecting 14 billion bushels or over for corn, if you're in the camp of thinking our production will be in 3.35 billion bushels for soybeans or larger than that, then you might want to consider now putting in some hedges or locking in some bases or potentially buying some puts. Now to move into the market movers in the upcoming weeks. One of those will be continuing to monitor the Brazil and Argentina production estimates, looking at the export logistics and comparing their export pace to the U.S. and seeing if the U.S. is declining their exports of specifically soybeans greatly in the upcoming weeks. In addition, one of the market movers may be the quarterly stocks report, which will be released on March 28th. And this will allow us to see where we are with current supplies of old crop And we'll also want to monitor our domestic usage, and these will be weekly reports such as the crush and ethanol. And when we're looking into the crush, something else to consider is the Advanced Biofuels Renewable Fuel Standard, that this has been increased from 2 billion gallons in 2012 to this year being 2.75 billion gallons. And this will be something to monitor to see if the biodiesel, if we continue to produce more of that to meet this renewable fuel standard, or if we'll be importing potentially ethanol from Brazil. I would just like to thank you again for watching this iGrow podcast. And again, I'm Lisa Elliott, and I'm the Commodity Marketing Specialist here at SDSU. So if you would like to find more information about this topic, please visit igrow.org. And thank you.